Hi there, it's time to use the Wyckoff lens to look into VeChain and see what's going on and what's coming next. If you're new to my sessions, these are the 3 key items I'll cover during the session. So let's start with the weekly chart of VeChain. Here, we're still going through a testing period. So if you're new to the Wyckoff method, basically the test period during the accumulation cycle after the selling climax is the test of whether there are still weak hands over there. If the big guys is going to push the price further down, they are going to sell whatever they have. Or are there diamond hands over there? If 90-95% are diamond hands there already, and they're not going to sell, then however the composite man or the whales are going to push, the price just isn't going to go down. So that's where it finds the bottom. As of this moment, the test is still going on, because after the previous selling climax back in April and the subsequent test during June, because of the October 10th announcement, it kind of triggered very crazy actions across the board. Not only because of the tariff, actually, and because of all the things going on, like the interest rate changes, not just US, but around the world, especially Japan, that impacts the carry trade a lot, and that in turns impact the liquidity, or capital flow, basically. So here, it seems to be stabilizing after all those uncertainties or all those actions that's taking place, or likely going to get to the very end of whatever actions they may be taking. So what we hope to see is that it stabilizes around the current level. We have 2 yellow dashed lines over here, one at around 0.013 and the other around 0.0096. So those two are levels extracted from the previous low point, one from the 2023 accumulation cycle, the other from this leg of backup or last point of support during 2020 November, before the gigantic distribution cycle during that year. So for where we are now, if it stabilizes between this range, what we can hope for is that if the tests are still going to continue, it's going to climb above the 0.015. Remember, that's what we hope for, right? It's going to climb above this, stay above the red, and trade sideways before it gathers sufficient strength to show us a sign of strength that challenges the yellow key level of 0.035. That's where the automatic rally tested. Okay, that's around the 0.035 level. The AR closed around the top of the long-term playground zone at around 0.031. Okay, so it's not too bad that the subsequent horizontal trading comes back to between the red and the white line. Okay, so let me repeat once again in case that's too much. What we hope for is to see, at least for neutral scenario, for the sideways trading to happen between the red and the orange key level, 0.015 and 0.026. A better scenario is for that to go even higher to the white solid line at around 0.0316. Okay, that's somewhere set by the automatic rally. Even better is for us to see a sign of strength, meaning a challenge to the yellow key level of 0.035, accompanying with higher trading volume. Okay, we have been at a pretty low volume for a couple of months already. Okay, we hope to see something like the one we had on the week of April 7th, around 140 million. Okay, we haven't seen that for half a year already. So that's the big picture. After the sign of strength, then there's a potential for subsequent backup, retracement or last point of support, continue to trade up to the next distribution cycle. That's what we hope for in maybe 2026. All right, daily. What additional information it's giving us? So we already talked about that we potentially have gone through the selling climax in the beginning of this month, and also the automatic rally. What's happening right now or over the past week is basically more tests, like I described, towards the 0.013 line or even lower to the 0.0095 or 96. The thing here is that the price still continued to trade at the weaker side of the downward channel, or this air hockey table, this blue box over here. So if you're new to this air hockey theory, imagine these candlesticks or this line is the path, the travel path of the puck on an air hockey table. It bounces in addition to the two edges, also sometimes along the center line. So you observe all these behavior that's going on. Alright, if I change back to candlestick, you see the wicks tested the ceiling or the bottom of the box. So that's how we use this box. Currently it's still trading on the lower half, meaning the weaker side of the box. What we are aiming to see is that let's travel to the stronger side, the upper half of the box, and then trade or break outside of this downtrend. The chance of it coming, we have to wait for a little while, but it's not too far. So looking at the volume, even when the price climbed over the past few days, or even when it got sold, it's not too high compared to the one we had on the 23rd. Okay, it seems like currently whoever is trading VeChain still thinks the 0.0136 is a reasonable price level. So that's why over the past couple of days the volume has been pretty low. It has been staying low after this one. Okay, so these two with higher volumes, November 21st and November 23rd, kind of set let's say a benchmark price range for the people to trade, and that's why the price has been jumping up and down within this range at a very low volume. So there's no further direction as of now. It's just a matter of time for it to edge towards the stronger side and confirm the trend change. So those two opportunities, one, this around Christmas, a more positive case, meaning the price goes above the red key level, challenge the ceiling of the downtrend and edge towards this area. So positive, but looking at what's happening right now, especially today, the price got rejected with that long wick at the top. It seems to be less likely. Okay, Christmas time, less likely. Tests will continue, but we still have different scenarios. Neutral scenario, like I said, there seems to be short-term or near-term bottom set by the selling climax over here. That's where the yellow dashed line is. And the price has been trading or trying to stay above this line. The neutral scenario is that it continues to do that all the way till the beginning of next year. Even though this tip of the triangle points to the third week of January, around 22nd, 23rd, there's nothing to stop it from breaking outside of this downtrend earlier, within January. Alright, so if it really trades sideways, beneath the red key level and above this yellow dash line of around 0.013, that's the time frame we are looking at. So next time or next session when we come back, we'll see whether it's still staying within this neutral zone. Pessimistic area, obviously, is that it continues to bounce off the center line of the downtrend and bounce between the bottom edge and this center line. However, when we get to somewhere near mid-December, we're getting, or the price is getting, to this other support level at around 0.0096. That's extended from the very early days back in 2020. And that should be a very solid support line, because that's where the October 10th tested and rebound fiercely from that point as well. I don't hope that this pessimistic scenario happen. So let's say neutral is the more likely scenario. Going above, going below, maybe of a low chance, but still a possibility. Okay, so this hopefully marks the end of the test to the south side, and the weaker hands or diamonds hands test, hopefully it's over. Thanks for joining me in this session, and enjoy the rest of